Hello everyone and welcome back to another trade recap. So it's been another slow trading month unfortunately, but there have been a lot of opportunities, so there's going to be a lot of content in this video, a lot of trades that I can talk about and show you. So I think this month I took 15 trades, 11 of which were liquidity sweeps, which resulted in a net loss of negative 2.95%, which I'm not too concerned about because I'm really developing this liquidity sweep with a lot of ideas from a lot of new places, and the results are really exciting. I'm just integrating them slowly, you know. I mean, if I was just trading the normal entries, which I was trading previously, the 4 entries there would have given around the same result. So I'm taking a lot more opportunities. I'm getting the same result. I think that's a promising sign, because the more opportunities I can be in a way, the more potential upside I've got. I suppose the more potential downside as well. But anyway, I'll get straight into the trades here. So on screen right now, you're looking at an EU liquidity sweep, which I took on February 1st. So I'd say this is a very good entry. I was looking at this liquidity area here. So this push up, I know that there's a lot of stop orders and stop losses below here. So this is the liquidity area I was kind of looking at. This push down, this is what I would consider a multi-tap confluence. So this further strengthens the liquidity area. So when we did end up piercing this area with a good sweep, 2 big wicks, and we got this engulfing candle, I was really happy to enter. And this one basically went straight in my favor for a 3% win. One thing which I do need to test is targeting the next strongest liquidity area, which I would say is right here, because had I set my, let me see if I can edit this, had I set my take profit up here or maybe a little bit below, this would have been hit quite quickly on NFP Friday. Yeah, so that's something I need to play around with a bit more. There will be some trades where I might make a little bit less. For example, this one where 3% was here, the next liquidity area might be lower down, so I might make 1 or 2% on some trades. But I do think this will improve the strike rate and improve the return. One thing that may be bad about this trade is this V to the downside. Another thing that I'm kind of toying around with is when price action kind of looks like it's going against us, so whether that's really strong momentum into the lower liquidity area or a V going into the lower liquidity area, because of course after a V we're expecting a range and a continuation of the second leg. So that is something that I also need to test. But yeah, a great trade and one of the winners this month. So the next entry I took was one of the traditional trending entries, and this was a continuation on AU. So price action here was looking great. We had a really strong push down, single candle pullback, and an excellent break with very little wick. So this alone is pretty good by itself. We were kind of coming from quite range bound price action, you could say, but this V right here, I think this makes the entry a little bit more high probability. I mean, with the range bound entry, with the range bound price action, I would say this is maybe an 8 out of 10. Like the range takes away 1 point, these triple wicks take away 1 point, but considering the V, I'd give this maybe even a 9 out of 10. The wicks are the only real warning sign in my opinion, and considering this V and how we're trending, I was really happy to set my order here. I think I got tagged out, yeah, so this one resulted in a 1% loss, but I was really happy with this trade. Ultimately, we did reverse from here. So the next liquidity sweep I took was on EU, and this was on February 5th. I was looking at the liquidity area below this push up right here. You could argue that there's not that much liquidity below here based off of the size of this push. The way which I'm currently considering it is based on how much we've broken kind of the next major liquidity area on the opposite side of the range. So because we just broke and retraced here, I'm still thinking a lot of people are still that bought within this leg. Their stops are still below here. And even if their stop losses aren't still below here, there's still going to be a lot of stop orders below a major low like this. So had we continued, then I may have kind of disregarded this low, but because we just broke and retraced the high, the major high, I was still considering this a liquidity area. We came down, gave a multi-tap confluence, kind of forming a double bottom, a lot of stops below, double bottoms, and we broke into it with a good wick, took out at least 5 pips, which is a good rule of thumb, I would say, and You may notice I did enter this before market open, London open, sorry. And the reason for this is, well, it is a range bound entry. So the reason that we don't take trending entries before 8 a.m. on a Monday is because it normally just ranges around on a Monday/Tuesday. But of course, this being a range bound entry, it doesn't negatively impact the results whatsoever. Quite often it does go in the desired direction and it just ranges around, which is perfect really. But yeah, this trade did end up resulting in a 1% loss. And from this point on, we did break out of the range, and that's just the way it goes sometimes. I was really happy with this trade. I'm not sure if I'd take it again though. So the next trade I took was on GU, and this was a timed flag entry, which is one of the entries we trade in Zentum based off of session opens. So really good trend here. There's very little shift in the pullbacks, a great impulse for GU. We were kind of coming from a little ascending channel right here. In fact, an ascending channel above a larger range. So this is kind of serving as a liquidity sweep, you could say, on a higher time frame. And from this, we got a really good push down. We didn't really get any shift in the pullbacks. You could argue there's a bit of a shift in the first few candles here, but the way that we didn't even retrace this one candle, 3 candles to take out half of this one candle down, that kind of shows me that there isn't really that much of a shift here. And then we broke and retraced the high, ranged around a bit during Asian session, and then just before London open, I market executed, and you can see we did initially move in my direction, and then we came back and tagged me out, and from there we just moved up. But yeah, this was a great flag, and I take this one again. So the next liquidity sweep I took was on AU. This was on February 6th, and I was looking for liquidity grab above these 3 pushes down here. These are all relatively equal highs, all of which had a good push down afterwards. So I know that there's a lot of stop orders and stop losses above these major highs. We were also in a larger downtrend. I mean, you can kind of see it on the higher time frame, this impulse down, this impulse down. So going in the direction of the trend really improves the strike rate of this entry. Unfortunately, this time it resulted in a 1% loss, but I think this is one of my favorite trades that I took this month. I really like this entry. I didn't consider how long these recaps are going to get with all these new entries. So this is quite a similar liquidity sweep to the AU one I just showed you. This is on EU now. I was actually looking mainly above this high here at this push down. This one also has a directional bias. As you can see, we've got this larger push down here. So taking shorts, taking trades with the trend is a very good thing to do. Looking now, there is actually a liquidity sweep here. At the time, I didn't take this because I consider this a minor liquidity area, but actually taking minor sweeps in the direction of the trend really does make a good difference to the strike rate, and it's actually worth taking minor liquidity sweeps, provided that we are in the direction of the trend. But at this point, we formed this high, got a push down. I'm considering this a major high now, and I was looking for shorts. And we had a really good shift candle. This candle that formed right here is really good. But yeah, this is a great trade, similar to the AU one. I was really happy with this. And the next trade I actually took on EU was just a little bit later. So we actually started to ascend right here. This is an entry I would have taken traditionally without the liquidity sweep, just based off of larger downtrend, ascending into a liquidity area, only breaking and retracing highs, triple wicks on the top, pretty strong break of the low with a good close. So at this point, I'm kind of expecting the trend to continue, but unfortunately, I got tagged in and out with one candle. I think one reason why people may not have taken this trade is maybe they're concerned of it being a bit range bound. For me, this is really high probability based off of the ascending into the upper liquidity area, but I think one reason they may not have taken this is due to that. I think possibly the main reason people may have been a bit hesitant with this is the break on EU. You really want a strong break. For me, this was on the cusp, but considering everything else, I was willing to take it. But I know some people really like to play it safe and wait for a 2-candle break. But for me, I was willing to take this based off of the wicks, price action. I would say everything was going for this trade. It was looking really promising to continue the downtrend. The inverted charts got me there. I nearly said uptrend. Yeah, great trade. I was really happy with this when it set up. Okay, so a winning trade now at last. This is on EJ. I'm kind of seeing a larger uptrend here. Maybe you could call this a correction, and then we're seeing a continuation of that uptrend. So we're kind of seeing this on the higher time frame. which is brilliant. That's definitely tells me that price wants to move to the upside. We're seeing a V here in prior price action, which is generally another good sign that price wants to start moving up. Mainly though, I'm just looking at this impulse. This alone is so clean. We were having really strong breaks, multiple candle breaks, single candle pullbacks. I mean, look at this pullback candle. It's so nice. We've got a big wick to the downside, solid close. So when we had that break, even with a bit of a wick, I mean, on a JPY pair like EJ, that wick is of no concern at all. I was tagged in on the next candle and I just barely stayed in this trade. I'm using a 10 pip stop loss, and I think, what was the MAE on this? 9.3. So with JPY spreads, I was probably like 1 or 2 ticks away from actually being tagged out of this. So on JPY pairs, increasing my stop loss is definitely something I want to consider, especially on NJ. Yeah, I barely stayed in this. So trailing my stops below the low like I normally do. We broke the high here, trailed my stop loss there, and we broke the high here. I wasn't able to move any higher, I don't think. So this actually resulted in a 3.22% win. But yeah, what an awesome trade. So back over to EU again now for another liquidity sweep entry. And I don't know if I take this one again, you know. There's a few things I've learned since taking this trade, because I am kind of starting from scratch now, you know. With this new entry, I'm having to learn as I go. I'm figuring things out in the live markets and in backtesting. So I'll explain what I was seeing first. So I was looking at this liquidity area here. You could say that it was grabbed at this point, but for me, this was a bit of a shallow sweep. I think when you have a directional bias, you should be able to have more of a tolerance for a shallow sweep or a minor sweep. But at the time, I was like, no, it hasn't taken out the amount that I want it to. So I didn't set an order there. I didn't take that. I actually waited for this later sweep, which definitely pierced it a lot more deeply. But looking at it now, there are a few things worth considering, and of course I have to test this, but the way that price had moved down so much, I don't know if there are many stops above here. So perhaps I shouldn't be drawing on the liquidity area here. I should really be considering it from this point, like this, and this makes a lot more sense. But there is one thing here that's still worth considering, and that is this V followed by a range in prior price action. After this, I am really expecting a push up. I don't think that's what happened, but taking trades against this knowledge of prior price action that I've got, maybe something that's a little bit risky. Sure, we're in this larger downtrend, so it's great to take shorts, but looking at this actually suggests a possible reversal and that we want to move up. So I think in future, if I'm seeing a V and a range going against me, I may skip the trade. But yeah, this was a pretty good entry, I would say. Because it's a major liquidity area, I was willing to tolerate a little bit softer of a shift on the entry candle. But yeah, this, I took it on Friday afternoon. I considered it really high probability and I deemed it worthy of taking on a Friday afternoon at the time. But now looking back with this V, I don't know if I would take it based off of this push down, because at the time I was looking at this push down, but now I'd be taking off of this push down. And yeah, this resulted in a 1% loss. We ranged around and then we started moving down, I think. That's just the way it goes, I think. But yeah, pretty good trade. I'm not sure if I'd take it again. So back to AU now. This was another liquidity sweep entry. I was looking at this major high, which I've drawn on the liquidity area for right here. This may have been, I'm still thinking about this, but were there still stop losses above here? There's definitely stop orders. It's a major high, but have people closed their position after this impulse down? Possibly. You know, it hasn't really reached this major low, but there still may be people that have closed their positions. So I don't know, you could argue that this isn't that good of a major liquidity area, but there's definitely still stop orders. We're in a larger downtrend again. So I think this is still worth taking, but again, I'm still learning this on the spot. You know, I haven't mastered this like the other trending entries yet. Of course, I've done a lot of back testing, but you know, sometimes forward testing is where you actually start to notice things. And this trade would have been a winner. So it moved in my direction straight away. And during spread hours right here, so around here, I had moved my stop loss, I think, 25 pips back. So my stop loss was around here, but during spread hours, the spreads actually increased over 25 pips. So I got taken out for negative 1.17% or something like that, which was really unfortunate because this did end up being a winning trade. This would have been 3%. And one of my friends, Nico, on his prop firm account, it actually took them 7 minutes to close the trade after this news candle. So rather than getting out for 3%, he actually got out for 4.3% or something like that. Imagine, they didn't close it for 7 minutes. That's crazy, right? But yeah, anyway, this trade resulted in a loss because I hadn't moved my stop loss far back enough. So in future now, I am going to be moving my stop loss at least 30 pips back on the USD pairs and probably 40 pips back on the JPY pairs, because I would love to avoid this happening in future. It's not really worth completely removing your stop loss. It's always worth having a stop loss, but I am going to move it back quite far now in future just to avoid this scenario in future. So the next liquidity sweep I took was the following week on AU, and this kind of fits the point that I was saying again previously about how I don't know if there are many stops here after this big push down. Looking left, we've broken this point by quite a bit where a lot of people would have been targeting, so I don't know if there are as many stops up here. So that is something that I'm going to be keeping in the back of my mind moving forward, because I've noticed this more and more throughout the past week, and we are actually seeing an uptrend in price action. You could have been looking for a sweep here, for example. That's one thing that is also been quite prevalent in my recent backtesting, looking for minor sweeps in the direction of the trend. Also seeing a V here. So there's a few things actually going against this trade now that I'm looking at it, based off of the ASRs I've been doing, you know. So I don't know if I would take this one again. There is possibly a sweep here. I'll draw this on as straight as I can, a sweep here, but I really do look for the major highs and lows. So my highs and lows would have been drawn on here and here, my major liquidity areas, sorry. And what always happens, I see this happen so often, is if there are two liquidity areas quite close together, price often gravitates towards the one furthest away, which is often the stronger liquidity area. And that's exactly what I saw happen here. Price rejected right here to strengthen the liquidity area, rejected based off of this liquidity, and then I was able to get involved a bit higher up. I didn't take this in the middle of the night. I actually woke up just before London session and I entered a slightly better price, and price moved in my direction for a while, broke this swing low right here, and then we started moving back up again, which makes sense because we're in an uptrend. So the same thing happened here, you could have bought there. Same thing happened here, you could have bought there. So that is something which I'm going to be keeping in the back of my mind as well. So there's a few things going against this trade. Don't know if I take it again, but yeah, that's the next trade that I took, which resulted in a 1% loss in the end. So the next sweep on EU, kind of similar to what I was describing on AU just now, but this is a lot more prevalent. So again, is there still liquidity above here? Should I be looking at this liquidity area? You know, we got this big push down. I had really drawn on a mega liquidity area at this point, and I don't really know if this is worth looking at. Looking at price action, there's a big V followed by a range, and within this range there's another V followed by a range. We're actually starting to see price trend up at this point. So this is a trade I wouldn't take again. It's really great to be a novice at something again because there's so many learning experiences like this. Previously, having traded the trending entries, and I kind of feel like I've mastered those to some degree. It's really good to have something to learn again about in these markets, and there are so many opportunities with these liquidity sweep entries, and I'm really starting to see these patterns everywhere now. So I am so happy to take a few losses to make a few winners in the future. You know, there's so much I learned from this one trade alone. You know, is there still liquidity after we have broken to this degree? There's V's going against us. We're starting to see momentum going against us. There's a lot here which I can research to see if it has a negative impact on my results, which is a very positive thing in my opinion. I'm really happy about that. But yeah, I don't think this is a trade I would take again. Resulted in a 1% loss. I think this is over here, again, quite a saturated liquidity area. And then price action is against us as well. We're starting to see an uptrend similar to what I described on AU. I should probably be looking for liquidity sweeps in the direction of the trend. So yeah, brilliant. Right, 3 more trades now, all of which on AU. And I think they're all liquidity sweeps as well. So this trade is actually going against the larger uptrend. So it has an anti-directional bias, which is a slight warning sign, but doesn't negatively impact the results drastically, especially when it's a relatively high probability setup. So looking at how we react above this major high, we had quite a deep sweep, but instantly paused with this wick. Didn't take off of this candle. I waited for an actual rejection candle because I'm seeing this momentum up. I learned from the previous trades, I want to see a little bit more. I don't want to be taking it on the first rejection candle. You know, with major liquidity areas, it is good to take it on the first rejection candle sometimes, but having learned my lesson based off of the fact that we're in an uptrend, we're seeing this push up, I did wait for a confirmation and it worked out this time. So yeah, looking at this major liquidity area above this high, could have easily targeted lows, and yeah, 3% win straight off. It just moves straight down, which is brilliant. Yeah, great trade. So the next sweep, right here, looking at this major low, I think some people took this entry here based off of this push up. For me, this is a minor liquidity area, so I'm not looking at this. I'm looking at the major highs and the major lows. This is where I'm drawing on my liquidity areas. And this little push up served as a multi-tap confluence to further strengthen the liquidity area that I was looking at. It did give a shallow sweep at this point below here, but I wasn't willing to take this entry. I wanted to wait for the liquidity to be swept fully. We got quite a strong shift candle. We immediately moved in my direction, possibly could have moved my stop loss to break even at this point. Something else that I want to test. I don't have enough time to do all this testing, but that's why Zentum exists. I suppose we all do the testing together. When price moves 1% in my direction, I would like to test moving my stop loss to break even, because at this point it would have actually saved me the 1% loss. And I feel like so many times the direction, I guess, right, but it comes back for a loss, and I don't know why I wouldn't take my risk off the table. I think that's logic I kind of acquired from GT, which is a little bit naive, to be honest. So, you know, locking in profit a little bit more aggressively is definitely worth doing with some of these entries. But yeah, again, another trade which went to 1 or 2% profit and came back for a loss, and I'd like to avoid that happening in future. Not to avoid losses, but to manage my risk properly, like a professional trader, you know, not a novice. Brilliant entry, really happy with this. And now the final liquidity sweep, which I literally took last week, just a few days ago. This is more with my present knowledge of the liquidity sweep entry, considering more things like directional bias and price action being in our favor. With a few of my previous entries, you know, I was taking it where momentum was going against us. The liquidity area may have gone a little bit stale, or there was a V going against us, you know. So these are things that I'm starting to consider. Still not fully tested, but I am keeping them in the back of my mind. So here we have a larger downtrend, a V to the downside, and I took it based off of this sweep right here. Very strong shift in momentum. This could be a bit of a warning sign sometimes. For example, if the shift candle was too big, then it's already moved too far in my direction and there's not really enough room to go for a 3-to-1. I think in future I will target lows like this one, because the 3-to-1 was around here. And again, another trade which moved in my direction immediately. This one actually came back, tapped break even during London session and then moved away again, which was quite interesting to note. I also noticed how this double bottom formed right here. So these two lows here, there's liquidity below that. But again, I'm still using the logic where I expect price to gravitate towards the stronger liquidity area, which is this major low. But interestingly, we did tap below this double bottom. On a lower time frame, this will be a lot more prevalent. And then we got a news candle, which gave a big push up and tagged me out for a 1% loss. So I think this is quite interesting to note. It doesn't always have to gravitate towards the stronger liquidity area, because I was really expecting this to be taken out and for us to reach below here. But of course, well, news doesn't really help, because news can take the direction anywhere, regardless of my technical analysis. But yeah, I was really happy with this entry, and I was really confident that it would go in my direction, especially the way that we've got a V down here, a V down here, a range. I was expecting price to continue this larger downtrend. But yeah, seeing these kind of entries and having tested them a little bit more thoroughly now, I am really confident in the way that a directional bias can positively influence these liquidity sweeps. So I'm really happy with these trades. Thank you guys so much for watching to the end of this video. I really appreciate your support. This is probably going to be one of the longest videos I've uploaded in a while. So if you comment this emoji, I'll show you my gratitude in the comments for you having watched this really long video. So yeah, there you go. I'll upload again in around 2 or 3 weeks. Make sure to like, comment, subscribe, and have a great month ahead. Thank you, everyone.